Alright, what's up everyone? Welcome back to another episode of Crypto, Coffee and Lo-Fi. It is just past 3 a.m. right now and I am only just waking up, so bear with me. Alright, so if you've been following along on Twitter in the past few episodes, you'll know that I am quite bullish, but I am seeing a slight change in market structure here, so especially for people that try to do this or try to trade all full time or at their computers full time, it becomes quite difficult to kind of step away from having a bias over the market and having an idea of where you think the market is going to head. What makes that a little easier is when you have a kind of a systemic approach that kind of tells you what direction that the market should head. All right, so my approach a few days ago was telling me that I should be looking to get long on the macro timeframes, right? So like on the weekly and daily H4. But now that we've kind of retested previous areas of resistance, we've started to distribute. So I have accumulation and distribution all playing at the same time. So this doesn't necessarily mean that my strategy is wrong. What it normally means is that the market is going to range, right? Now, if I'm not confident in my higher time frame bias, I shouldn't then go and place higher time frame positions. It makes no sense. So I made the decision last night that I'm going to step away from my spot positions, step away from my bullish bias on the higher timeframes, and instead just low risk scalps. If I miss the majority of this next leg up, that's fine. As long as I'm not getting flushed out on another dump. We only have like another 20 days left of December until the new year starts. I would rather end this year on a positive note, close out my positions, and just do some low risk scalps. So if you are new here, I am just using the same pattern to find accumulation, distribution, support, resistance, and then once I find accumulation and distribution, I then use that same pattern again as my entry trigger. So what is that pattern? You can think of it like a head and shoulders. So I look for a high, I wait for that high to be swept. Once it is swept, I then look for a break below the low that's responsible for taking that high. I then look for a retest of this range here. Once I get that retest, I then look for the same pattern to form again. Now this is the first signs of distribution. Now you can think of it the same way but for accumulation. So I wait for a low to be swept. I then look for the high that's responsible for taking that low to break. Once we get that break, I look for the retest where I look for the same pattern to form again. And that's my entry trigger. I do use a few other liquidity techniques, but this is pretty much the basis for for every decision that I make in the market. So if we go down to here on Bitcoin, I'm just going to run over this quickly because I have gone over my higher time frame view in the last few episodes. So go and check that out. Sweeping out a low, breaking above a high, sweeping out these lows, breaking above a high. All right. So for the most part, this is leading me to believe that the market is looking bullish, and that on the higher time frames, on the H4 through the daily and weekly, I should be looking to get long, and I should be expecting a continuation of this move. But Ethereum is printing some distribution that's kind of throwing me off. So we do have a similar structure of accumulation that Bitcoin has here on Ethereum. So sweeping out a low, breaking above these highs, sweeping out these lows, breaking above the high. But you can see compared to Bitcoin, we actually got the retrace that we got wasn't as deep. So I am feeling a little bit iffy on the structure at the moment. So if we go onto the H1, sweeping out this high, breaking below this low right here. So once we get the break, forming a high, zoom in a little bit, forming a high right here, sweeping it out, breaking below, and then retesting. Now we came up, we took out this key high, and then once we did take out the high, we just started distributing again, which isn't a good sign, right? So slowly, what's happening is that the amount of conviction that I had in my higher time frame bullish bias is just diminishing. So I'm in a few positions at the moment. I'm going to stick with those positions, but you know, for the most part, I've closed out a lot of my spots. So so sweeping out that high, sweeping out this high right here, breaking below the low, and then we get the retest, sweeping out this high, breaking below the low, retesting again, sweeping out the high, breaking below the low. So then if we get the higher time frame swing that was responsible for taking that high, you can see we've just taken another high, more sweeps, more breaks in structure to the downside. So comparing this structure to the other higher time frame lows that we had, for example here and here, there's some massive differences. We didn't get the obvious distribution all in this leg down the bottom here. So I am thinking that there's a possibility we can sell off. It doesn't mean that I'm bearish though, it just means that I no longer have the high conviction in my bullish bias. So the bearish scenario would be price retesting this range somewhere like in this area and then continuing the sell-off, so something like this. And if we get redistribution somewhere here, that would lead me to believe that this low could possibly get taken and this low, a deeper retrace into this leg. The bullish scenario, however, okay, we swept out this low, broken above the high. We've just taken out this key low. Now for the second confirmation, we would need to break up above this high. Not quite enough for me to enter long, but if we broke up above this high, invalidated this distribution, and then retested this zone somewhere in this area, then I may jump back into my longs, but for now everything is looking a little bit too iffy. So yeah, just to recap, I don't want to confuse anyone. Basically, because I'm getting too many conflicting signals, because of the fact that we are so close to the end of the year and I have had such a great year, I'm kind of easing the risk off, closing out some of my positions, leaving some open, and yeah, just taking lower time frame scalps. I'm really not keen on taking a big chunk of my losses away to end the year. That does not sound good. So just relaxing at this point. No worries, guys. So I think that pretty much concludes today's episode. I think be careful in higher time frame positions. If we do get the break of this level followed by some reaccumulation here and we invalidate the distribution, then ETH could head much higher. ETH BTC is obviously quite bullish. You know, Bitcoin, similar kind of story here. We could head much lower if we don't get some reaccumulation shortly, but a little bit too iffy to be taking positions right now. No worries, guys. If you enjoyed the episode, like, comment, subscribe. If anything in this video interests you, the way that I'm analyzing the charts, click the link in the description below, pick up a copy of the strategy, get access to a Discord. There's over 500 people there all trading the same patterns, helping each other out, so that's good. No worries, guys. Enjoy the rest of your day. Bye.